In this video, I've decided to do something that's been requested for quite some time. I'm going to run through a phase of trading, my most recent phase of trading, 3 trades and 2 missed opportunities. Now, what you're about to see is 100% win rate trading, but it's not always like that. My actual win rate is closer to around 50%. I just had a lucky streak here where I took really good trades and all 3 of them won. When I do end up taking some losses, which will inevitably come in time, I'll make a video on losing positions as well, as these can be valuable to learn from. But for today, all you're going to see is 3 wins. Just so you know that I actually did take these trades, because I know what people are like on YouTube, here's the trades when I sent them out to my network. The second trade I took, I didn't send out until after the fact because I was out at the time. We'll talk more about that as we go. But the other 2, they were sent out to my network, and there's some trade proof there for the second one anyway. So let's get to it.
So the first thing that I do with my analysis is check out the weekly time frame. I'm not looking for actual trading opportunities here on the weekly because it's just simply too large of a time frame, and the trades that we find here would take weeks, months or years to play out. But we can get a good idea as to where the market is right now and where the market could potentially go. So this is what I would generally do. Just mark up highs and lows, swing highs, swing points, liquidity points, and then work out from that information where the market is and where it could currently lead to. So now we're inside of that weekly demand, but we're actually on the hourly time frame. So we've stepped down a lot. Now, when we look at the hourly, we see something pretty significant. We have an imbalance. This imbalance leads us in towards a demand zone. The range previous to this demand zone was efficient, right? We don't really have any imbalances left open over here. What we can do is then mark this hourly demand. I'm also going to mark the swing low just to keep a mental note of that. And then if we jump back out to that weekly time frame, you'll see that hourly refined demand has been retested perfectly with the wick that we saw coming down at the end of last week. So we can now see that this demand zone is evidently somewhere where buyers are interested in getting into the market. That's indicated by the fact that as soon as we tap this area, we saw a huge drive back to the upside. So this is pretty much everything that I need to see on the weekly. We've gained an idea as to the fact we are reacting from a refined demand zone. We also see significant buying pressure coming in, and we are looking to push back at the sweep of this weekly low that we previously made. We also have imbalance above and an area of supply. So my future trades over the next week or so are going to be looking to drive the market back up towards this high. At this point, we can step down from the weekly to a lower time frame. For this, I will go to the daily. Now right here, the daily is not giving me any more information, so I will once again just step down towards the 4-hour time frame. Taking a look at the 4-hour here, we get a bit of a clearer picture. What we can start to do now, because obviously that weekly idea is very high time frame stuff and generally not what we're actually going to be trading. We use it for narrative building. We built our narrative. We have a demand zone retest. The market has pushed back up over a weekly low. We know there is potential to target some of these higher areas, maybe driving the market up towards some open imbalance zones. So what I would do now is just simply eliminate this zone. The understanding that the market is likely to move higher, we can now refine this down to something that's a little bit more tradable for the current week. So what we've got is a supply zone just here. Now this supply zone has very just slightly been missed. If we zoom in, you'll see there is still a tiny inefficiency into this supply. These 2 swing highs here as well, I would see as relative equal highs. So this is an area of tiny imbalance, but still imbalance, a supply zone and some relative equal highs. So this to me is an area that I would look to drive price towards. I'd expect to see the market trading towards this area of supply, and that alone can provide some really good opportunities. So that is definitely in mind for now. Now, if we take a look at how the market has reacted over the weekend, because obviously this analysis was done on the weekend, we then see that we had an impulse to the upside. So this move here, this gap, is actually an impulse to the upside. The gap occurred because over the weekend, speculation drove prices higher, right? Any buying that took place was basically indicating that the market was going to be moving higher. So that we can actually see this pretty much as just a bullish move, although there is a gap, and that is worth noting as well. So from this point, because we're moving to a more intraday perspective, I'm going to drop to the hourly time frame. Taking a look at the hourly, we get a bit of a better view of the area of demand here and the gap that we've created, and we get a bit of a better view as to where the market could reach to as well. So we've had a push up just here, but we haven't yet formed a valid closure. To create a valid break in the trend, we need to see a confirmation with a candle close. This is just the wick, so right now we haven't really confirmed anything. The other thing I will note is when we create gaps in a market, the gaps are very often filled. So I would just use this area here, which is generally going to be that gap fill. And I would anticipate that at some point, whether it's from where we are right now or from a drive higher, the market will come and fill this gap. So if we're expecting this gap to be filled, it's definitely worth keeping in mind this area of support as a potential target that we could use for trades. Now, you might ask, why don't I use the last candle before the impulse? Because when I'm marking generic supply and demand, that's what I do. So this would be my demand zone. The simple reason why is just because it's safer to target this support floor, right? If the market comes down all the way to this level and then bounces, and I'm targeting here, my dynamic risk reward is absolutely terrible. By this point, when the market reaches the support, I'm basically going to be risking 3, 4, 5, 6R, whatever my trade potential is, to make probably 0.1 or 0.2%. So it makes more sense for me to just simply use this support floor as my target for any shorts that we do take. Although at the moment there aren't any shorts, but you can see what I'm doing here. When I'm trading, I build a narrative. I go from top down to build ideas out as to where the market is and where it can go. And then all I look to do from there is react. Next thing to note then, we have a downside target, but we also have this upside area of supply. For a supply zone here, I'm generally most interested in that little blue candle there, what you could call a hammer candle potentially. The reason I'm interested in that is because it's the last candle before the impulse. My supply and demand rules is the last candle before the impulse. So I would mark out the last candle before an impulsive bearish or bullish movement. For me, that's going to be this little blue candle here. So why did I extend the supply zone up? Well, I really hate to operate with supply zones like this. At the end of the day, we have a notable swing high. This swing high could be traded up to, and providing it doesn't break, it wouldn't invalidate what I see as the area of supply. So that's my supply zone, that's my demand zone, that's my target on the downside, that's my target on the upside. So now we can also see there is imbalance just here, which draws us towards this point. There's also a massive imbalance here. We just can't see it because it's a gap. So we have imbalance and demand below, we have supply and imbalance above, and we have a market that hasn't really decided on which direction it's heading in just yet. Before we continue with our targets and ideas of moving the market higher, we would love to see the gap filled, because when we create gaps over the weekend, they are more often than not filled by price. So realistically, my dream scenario here, and the trades I'd love to react to if they occurred, would be a push up into this imbalanced supply, basically sweeping this supply that we have here and filling the final imbalance. A sell from this supply down towards this support floor, filling the gap and the imbalance on the downside, and then a buy from this area, targeting this open range above. That would be the dream trading scenario. With this new narrative in mind, let's jump the market forward a little bit and see what happens. As you can see, the market made a solid drive up towards this supply. Now at this point, I am not going to sell. My overall bias, as you know, is still bullish. So selling here would be a pretty dangerous move without first waiting for some form of confirmation. What I will do though, is drop down to some significantly lower timeframes. Now I took a look on the 10-minute and the 5-minute here, and these timeframes give us a solid indication as to what structure is doing. So we could look around the 15 or 10-minute. I don't want to go to the 1-minute because I find that to be too low, jumping from the hourly to there. But the 10-minute here can allow us to find a potential intraday opportunity. So another thing worth noting is we are trading around the time of New York Open. This time is prime for reversals. We don't always reverse around New York Open. But leading into the beginning of the highest volume timing of New York session, if we do see reversals, we know those are going to be pretty strong reversals. It's just a standard characteristic that happens in the market quite a lot. So if we consider the structure that we're now seeing, we have a high, a higher low, and we're just now pushing to create a higher high. If we wanted to see a reversal in here, we could then allow the market to trade a little bit further, and if it broke through the previous higher low, creating a lower low, we could then look for selling opportunities upon a pullback. That would be the narrative I'd build in terms of actually getting into a position. So this is prone to change, but for now we can mark this low as the low we'd like to see broken to actually validate a trade. As you can see, the market then broke through, created a closure here on the 10-minute time frame, which is exactly what we want to see for validating a position entry. Now we can actually mark out the supply. What did I say? I used the last candle before the impulse. The impulse is this strong bearish movement. It's an impulse because it's broken the structure. It's no longer a corrective move. It's actually impulsive here on the 10-minute. We can mark out the demand just ahead of this impulse. Realistically now, if we were to pull back, we could look for a short. Now, I didn't immediately place an order. I actually waited to see a little bit more significant downside. And we also created something interesting here, which is what we would call an inducement zone. So an inducement is basically an area in the market that looks like it could be good for a reaction. It will induce traders to sell the market. So people will be selling at this area just here. Now, what actually happens with inducements a lot of the time is there is still some inefficiency left leading up to other areas of supply. So rather than reacting from here, we push stop losses, we push the remaining imbalance, and we fill the imbalanced extreme zone, which is generally just the zone at the top or the bottom of a move. In a selling scenario, it's at the top. That is where we want to sell. So my sell limit would be placed just here. Generally, I like to put my sell limits just slightly under levels because spread can actually make you miss trades. If you do this, you're not going to miss your trades. You'll get tapped in and you'll run quite nicely a lot more often because the spread won't make you miss by a pip, which is probably the most depressing feeling in the world. So here we have a trade setup then. That's what the trade would look like. We have the shift in structure on the low time frames. This is only really validated from the fact we've reacted from this higher time frame area. You can also see if we were to refine this zone down, we had a nice reaction from the 10-minute supply here. Once again, last candle before the impulse, an indecision candle before a strong downward move. So now the low time frame agrees with the high time frame bias. And basically everything is played perfectly into our idea of selling the market down to fill the gap and then trading the market back higher. That is the overall game plan. This is our position. Let's place this order on and see how it goes. So we're going to risk 1%. Now obviously this is a simulation account because I'm backtracking, recapping trades that I've taken. We're going to do a sell limit with 1% risk. We can save and journal that. And now we've got our position prepped up. So let's allow the market to run forward and see what happens. As you can see, the market came in, tapped into the area of supply, and then we started moving down and pretty quickly ran towards the target. Now I took some profits down at this swing low. I actually entered slightly higher on my real trade. In fact, the real trade, the drawdown was pretty much non-existent. I perfectly tapped it because I used the 5-minute. But I'm just showing you the theory here. We're pretty much at the same trade. It's completely fine, right? If anything, the trade I took in reality was actually a bit better than this one, but it's completely fine to highlight this here for you. Same exact theory, and you're getting the lessons that you need. So we traded down towards this area of support. From this point onwards, we then saw a market reversal to the upside. Now, unfortunately, within this drive up, I didn't have any opportunity to take a trade. I wanted to see the same kind of formation. Ideally, this would have been what we saw. A conformational shift to then drive us higher. Because the supply here has now been retested, it's no longer important. So we would expect that supply to break and for the market to continue through into the higher time frame ideas. As I've said though, unfortunately, I didn't get the pullback I wanted to see to buy. So we'll just give the market some time to make its movements, and I'll show you what I did as my next move. My next trade idea came in just here. At this point on the 30-minute, we've seen the first trade completed, the support retested, and the market's driven up and pushed through the supply. This tells me that this is not going to be a supply that's going to hold because we've driven at it twice now. So I can eliminate that and focus on taking this market further to the upside. Now, after seeing that push, we saw the market come down, sweep out once again what we would consider as an inducement zone, and then trade into a 30-minute area of demand. Now this indecision candle here, the last candle before the impulse, is what I consider as my demand. We have an efficient range below that on this time frame, and that does change if we go a little bit lower, but by this point we'd already seen the market structure shifting. So here we have a lower low, lower high, lower low, higher high, right? And we've seen a push up just here, breaking through the structure. We have closures around this point here, validating that we are indeed now shifting into an uptrend, and we have a very notable 15-minute demand here. This demand would be a good level to buy from. If the market is able to pull back and fill this final piece of imbalance, I'd be very happy to buy from this zone with stops beneath the low. So my trade next up looked like this. I had a long position, stops under there, and then the targets, we could have extended pretty much all the way up. Now, I was initially just targeting some previous swing highs. The overall narrative was to take the market up here, but realistically, I wasn't looking for a big hold, right? We have other hurdles along the way. So I'm just going to call it this swing high. Can't remember exactly where I targeted because as you'll see in a moment, this trade actually didn't get triggered. Now, if we then show that in action, we came down a little bit, created a little higher low, but then unfortunately just rallied. So I ended up missing this initial position. Now that sucked because I got the idea right, I got the narrative right, but what happened was the market reacted to this area of demand here. In hindsight, this kind of makes sense because I talk about a concept called the zone that broke structure a few times, and some people haven't heard about it. But basically the idea is when we're looking at supply and demand, if we think about the logic behind them, these are zones that indicate where significant institutional buying and selling has entered the market. So if we have a demand zone here that failed to break any structure, it shows that the demand wasn't really significant here. If we then see demand here that successfully broke structure, it tells us that this is where the buyers are kicking in strength. So realistically, it would have been fine to take the trade from here. The only problem I have with this is we often see these imbalances filled. And I'm a little bit more conservative, so I generally will wait for extremes to be filled if I'm not happy with the risk of putting my stop in an imbalanced range. Realistically, entering from here, if I was to clear the low of my stop, it's just going to be too big. The target towards the swing high is not going to be great. So I opted to be a little bit pickier. I don't mind missing a trade here and there, and that's what happened. So we can learn from that in hindsight. There are lessons I'm taking from that I've just shared with you here, but in reality, the trade that I took was missed. So we can keep this one on the chart, but it's not a trade that actually got filled. It's a nice concept nonetheless, and a little lesson can definitely be taken from it in terms of this area here and the zone that broke structure theory. All right, so now on to trade number 3. If we run the market forward a little bit more, you'll see that the market actually built some significant strength. The strength actually pushed us through this previous high and started leading us into an uptrend. Now we do have equal highs here. I classify this as a form of liquidity, and generally when equal highs are swept, I expect there at some point soon to be a reversal in price, right? A lot of the times if we sweep equal highs like this, we're going to get some form of pullback or exhaustion back to the downside. This is a thought that we can definitely keep in mind, but with the aggressive push that we had, we'd driven first of all through the sufficient range, and we'd basically opened some imbalances up towards some previous areas of supply. Now at this point, because this was a fresh day, I was up on a higher time frame. I just jumped up to the 30-minute and noted that we've got this area of supply just here, which would be a very clean target. The thought being, now that we've broken into an efficient range, and basically for reference for anyone who doesn't know, an efficient range is a range that creates a supply zone, sells off, and then the market comes back, fills supply, creates a new supply, and then comes back. So an efficient range is basically an area that retests every single supply or demand zone that it forms, right? If the market is moving in an efficient manner, and then the market breaks back up into this efficient range here, it's very likely that the market will drive all the way through the efficient range into wherever the next inefficiency lays, and then potentially retest the supply before getting the real sell. So that's just a quick explanation. Now that's pretty much exactly what we're seeing here. We have an area of supply, the supply's been retested. We have an area of supply's been retested. So this area here is an efficient range. Because the market has broken into this efficient range, I wouldn't anticipate a reversal until we've pushed through the efficient range, traded through inefficiency, and traded into a meaningful area of supply. So I had eyes on this supply zone, and my current thought process for this day's trading was simply, can I find a way to buy into this area? So if we drop down to the 10-minute time frame now, we can see that after having a strong closure to the upside, we had another quick drive to the upside. This now brings us very close to the supply zone that we want to target. All we need to do is finish this small move. But obviously, we are not going to look for a buy from where we are here to take it towards supply. Makes no sense. And there's every possibility that the market will just run into the supply without providing me with any opportunity to buy into it. But I thought I would try my luck. So I thought, look, if the market is able to pull back through the imbalances that we've created, first being here, second being down here, then we could potentially look for longs from down here. The reason I'm interested in the area down there is because we have an imbalanced demand zone. And think back to that rule I just covered about the zone that broke structure. Why are we not interested in this zone here? Well, the reason for that is because the zone that actually broke the significant swing high, being this swing high, is this demand just here, right? This is where the reaccumulation took place. This is where the significant demand came in, and this is what drove us through into a break into new highs, not this one. So again, the area above, being this demand, would be to me an inducement, an area that looks like it could be good for buyers, but is more likely to draw buyers in and then stop them out than it is to actually create a reaction itself. So my trade would now look like this. A buy limit on here, stop loss just underneath the wicks there, and a target up towards this point. This would be the position that I would then look for. It was around a 4.5%. Now, I actually took profits on this trade early. My phone was on 1%. I was out. I didn't think I'd be able to manage the trade, and I was very close to hitting TP. I did not want to get home and find out that that trade had turned around on me. So I got out for, I think, around 3.5% in the end, but still, we're happy with it, okay? So there's the trade idea. We're just looking for a pullback, basically trying our luck. We don't know if this is going to happen. Every opportunity, the bullish momentum continues. But if we do get an opportunity here, this is the one. We have an efficient range here. We have reaccumulation happening in this range. We have significant demand here. We have imbalances into this. We have inducement. We have basically everything here for a perfect, simple continuation buy to fill the higher time frame target that we're looking for. So let's go ahead and place the order for this trade. We're going 1% risk on a buy limit, and you will see after coming back down into that level, we got a very perfect tap and then a run back to the upside, pushing through the previous high and trading into supply. So as I said, I closed my trade early. I closed it, I think, around this point. Well, no, I don't think, I know. I closed it around this point. So we're going to go ahead and just close that position now. That was the trade I took. And as I said, it ended up being around 3.5%. So it was probably taken around here. Okay. So that is the next trade. Now, as you can see, we've got 2 consecutive wins. Could have been 3, but I picked the wrong zone, sadly. Very, very good stuff. A nice period of trading, right? Losses are normal. Losses will come. I actually haven't had one yet, but I have only taken one more trade since this. So, yeah, I'm sure I probably will have had one before the year's up. We'll see. For now, though, it's going on a hot streak. We've got 2 wins back to back, 1 miss in the middle, but we can't get too mad about a miss. And just so you can see, did this trade finish off all the way to the target? Yes, it did. We got a pullback and then we got a rally back up, trading towards supply. And now this will lead us into the most recent trade that I've taken, trade number 3. Through the next phase of trading, I didn't really find any opportunity meaningful enough to actually take a position. There was a sell, but it was a very slow momentum sell. There was a big drive up after that, but there wasn't really any opportunity for me to sell into this because I didn't really trust this downward price action. It's a good job too, because the top of the zone got wiped out, and if I tried to sell there, I would have been wiped out with it. Now, once we got to around this point here, where the market is currently trading, things became interesting to me once again. Why are things now interesting? Well, remember that buy zone that we tried to get into over here? Look what's happened now. The buy zone has been retested. With this buy zone now being filled, this is pretty much the final major inefficiency that remains inside of this trend. And because this has been retested, I'm now interested in seeing if we can continue the movement back up towards this area of supply. Now, again, I'm looking at intraday, intra-week setups here. So I'm going to be generally looking to get out of this trade towards this area of supply. Hindsight, yes, we could have probably targeted the swing high. That would have been fine too. But I'm happy with my trades. If there are a few R multiples per trade, if I can get 3R or more out of a position, I'm happy, okay? I don't need to push for big trades all the time. I just simply don't care anymore. I'm past those days. I get my profits. I get out. I'm done. I'm good. So we've got this idea then to run the market from where we are now up towards this area of supply with potential to extend, but I'm not too bothered. This is the next point of which we would see a reaction, if any. So this is going to be fine, providing the risk reward up to that point is good enough. So it took probably about one more day. Can't remember the exact time, but we had some consolidation here and we started to see drives to the upside. It was around the time where I'd seen this push to the upside that I got pretty excited about this position and started laying on my orders. So if we take a look at the price action now, just remembering we have 15-minute demand retest here and a fill of all of the inefficiency in this trending move. We've got a downward trending market primarily. We had a low formed inside of that demand. We've then had a push up. The only problem we don't have here is a significant break of structure. This realistically, just here, is internal structure that's broken. It's not a notable significant structural point. But if we wait for a break of this high, it's going to take a while. And realistically, I've got everything I need to trust my bullish bias. we're moving predominantly bullish on these higher time frames. We've just filled a significant area of imbalance and retested a very significant demand zone. And if we take a look inside of the lower time frame price action then, or the more zoomed in price action, should I say, we now can see 30-minute demand, last candle before the impulse. Once again, we're going to connect the swing low, so we're going to include this demand down to here. Above that, we have imbalance. We always love to see imbalances filled, so this is quite good as well. And above the imbalances, and this is my favorite thing about this position, we have these 1, 2, 3 relative equal lows. Now there's 2 direct equal lows, and then the third one, which we call relative, is this one here. It's pretty much just showing that this level is acting as somewhat of a support floor. Now, when we see a support floor in a market, we understand there's going to be liquidity beneath that. Liquidity drives markets, and markets will run for liquidations. They will run to areas where lots of orders are situated. Aside from that anyways, we've also got that imbalance, and we've got a significant area of demand that we'd like to see the market retest. So here comes trade number 3. We're now ready to place a buy limit. We will buy limit this zone, once again, just above the zone to make sure that we don't miss out based on spreads. Stop loss beneath the zone, and then our target is going to go up towards this point just here. I think this trade was around a 5.5% max potential, so my entry stop may have been ever so slightly different, probably about there. Yeah, about 5.55 I believe was the position. So that's probably as close as we're going to get to the actual real position I posted. Now, obviously I'm showing you the exact trades I took, but the entry levels might be very slightly off. Stop loss levels might be off by a pip or so, whatever. You get the theories. So we can go ahead and place this order on now as well. We have this trade prepped in mind to target this significant high. Now, I did something that I would generally do on this position that I'm completely fine with doing, and you're going to see this when we get to it. So there was one thing I missed as well. Actually, after we swept the swing high here, I believe opportunity for a short did come in. This is something I want to highlight because it's something I journaled myself. So we had a movement like this, which would have been opportunity to sell the market. Yes, so after breaking the high, sweeping liquidity above this high, the market came down, broke some structure, and then we had a pull back to the upside. Let me show you on the 15-minute. Traded into this area of 15-minute supply here after breaking some structure. So we have shift here. It's only very slight with the wicks. It's kind of the reason that threw me off taking it. And then we had a tap into supply, and then the market sold off down towards our entry. So in terms of an intraday position, this would have been a good trade to take, but I didn't take it, okay? What I did take though was the buy. And here we go. We've been tapped in on the buy now, and you'll see how beautifully this trade moved. Check this out. We had a perfect rip to new highs inside of this trend. So this was about as perfect of an execution as you could get. The funny thing about this trade is a few people, when I shared this trade, said that I was wrong and it shouldn't buy from here and it should keep going lower, but that's what being contrarian gets you. Usually, you're right. So here's the thing that I did with this trade, which is something that minimized my profits or cut my profits down, but I'm still happy that I did it. So around this point, when the trade was running around 3.6%, so I was about here, I closed the position, right? We'd come into new highs, and basically we'd started to see the market slow down a little. So I'm going to close it here. This is slightly less than what I got in reality, but I closed this trade. Now, why did I close it? I did this because I was being an opportunist for a new position. What I'd seen here was the high swept. We'd seen a swing high swept, failure to close above. Now, I'm pretty certain this market's going up, but what we can see from this point is we have an open imbalance demand zone just around here, last candle before the impulse. At this point, I realized, look, I've made 3.6% on a trade. My minimum is generally going to be 3R. If I can do anything over 3R, I'm happy to close the trade. Obviously, I'll run trades out to targets where I can, but I saw opportunity here for a very big trade. My game plan was to buy a retest of this demand and run it up towards the swing high. We were looking at around a 9.5% potential return on this trade, and I thought, well, locking in 3.5% now, while still leaving open the opportunity to make 9.5% more, that is a very good deal. So I will take it. As you're going to see, although we did pull back, we didn't tap into my entry, and we ended up getting a very quick rally to the target the next day, which of course made me miss my trade. So I didn't manage this one perfectly in hindsight, but the thing is, I would do this pretty much every time because I've done this a lot before, where I take the profit a little bit early, go for the high reward opportunity, it pulls through, and then I turned what could have been a 5.5% trade into a 13+% trade, which obviously is a good deal if you do it over the long term. In this instance though, it didn't work out, but I'm just sharing that with you now. That is what I went for. So that brings to a close the phase of trading that I've just done and the phase of trading that I'm sharing with you today. Overall, we have 5 positions, 2 missed, 3 wins. This has been so far a 100% win rate trading phase. I can promise you, I do not hit 100% every single day, every single week, every single year. In fact, I lose about half the trades I take. So this is a very nice little run for me. I'm very happy to be taking back-to-back winners, but I'm also happy in knowing that even when I start to take losses, I'm going to be fine because my systems allow me to win long term. That's primarily because of the risk-reward profiles that my trades have. Take a look at this one, a maximum potential of 5.5%. The second trade, maximum potential of 4.5%. And the third trade locking in around 3.6% with a maximum potential, although I did let that one slip, of 7.1%. Obviously, if we're winning, call it a 4-to-1 reward to risk ratio, we can actually lose like 75% of our trades and still be profitable, right? Now, I don't lose that many and I don't intend to. But this is where the edge comes in. This is where the money is made. It's in the reward to risk profiles. If you can maintain a positive reward to risk profile and win more on your winners than you lose on your losers, then even if you're losing 50 or 60% of your trades, you are going to be just fine.
So that's it. That's how I made a very nice profit over the past 2 weeks of trading. Now, I didn't trade in November before that, but these trades certainly made up for that. Hopefully, you can take some lessons from the trades that I've taken. And as I said, when some losses come around, I will certainly make a video on those as well. So thanks for watching. You could check out this video here next, or you can use the top link in the description to join my free course and learn how to build your own trading system so that you can get results like what you've seen today. That's all from me. I'll see you in the next one.